Good afternoon. Welcome to today's class. I hope you are keeping well by grace. Um,
Good afternoon.
Good afternoon.
After Isaac.
uh, okay. So we've begun the discussion on accounting equation. Last week, we looked at how transactions affects the accounting equation cumulatively. Right. So today we're looking at the same accounting equation, but how the effect of transactions or how an effect can be interpreted into a transaction, right? An effect could be interpreted to mean a transaction. All right. So we would use this table to try to understand that. I'm sure that we are able to do more things today than last week. Okay. So how do we do it? Let's look at the question. It says that from the following statement, which give the cumulative effect of individual transactions, you are required to state as fully as possible what transaction has taken place in each case. The cases start from A to H. There's no need to copy out the table, right? So what is the main focus of the question? Is to state as fully as possible what transaction has taken place in each case from cases A to H, right? So that's what we are looking at today. All right, so how do we do it? 1 second. So from case 1, this is case 1, case B, case A, B, C up to H, as we can see from the table. On the very first column is a list of our assets, our capital, and then liabilities. All right. We noted that, let me try to pick out this. Okay. We noted from our previous engagement that asset should be equal to capital plus liability. That's what we've agreed on all this while. So we have a list of our assets which start from freehold properties, continues from plant and machinery, motor vehicle, office equipment, inventory, account receivable, bank and cash. There could be some other assets, but for now, these are some examples of assets that we've got, right? Then we have capital and liability, which is the other side of the equation, this side, right? And then for capital liability, we have one item for capital, one item, just one item for capital. So on this capital, we have the increases and then decreases to this capital. Capital here will increase when the owner brings in more resources to the business. When owner brings in more contribution to the business, we may see our capital rise. When the business is generating profit, we may see our capital rise, right? And then capital will reduce when the owner draws out something for private use or personal use, then capital may decrease. Then again, when the business is engaging in losses, then capital will also decrease. We can explain the losses and then the profit with just one equation, right? Profit and loss can be explained from the profit function. So profit or loss is a function of revenue. It's a function of revenue minus expenses. It's a function of revenue minus expenses. Okay, what do we mean? We're saying that the business will generate profit when there is more revenue, or when the business makes a revenue, generates a revenue, then it's likely profit will rise. And then if profit is going up, it means capital too will increase. If the business is engaging in expenses, then it's likely the profit will decrease. Or in other situation whereby the business is incurring an expense without a corresponding revenue, then it means that the business is attaining a loss, right? If we cannot match an expenses with a particular revenue, in that regard, the business may generate a loss, right? So we can say that our capital will increase with profit or more revenue. The capital will decrease with high expenses, right? i.e. with losses. Okay. Then we can also look at loan as part or as a form of liability. Then trade creditors is also an example of liability. Remember, trade creditors will regard those that we have bought goods from on credit, those that the business has gotten goods or has purchased goods from them on credit, or all those that the business has engaged with them on credit basis. It can also be referred to as trade payables. Trade payables. So that is it. All right. We can also discuss this element: freehold property, plant and machinery, motor vehicle. These are properties, right? Freehold property, plant and machinery, motor vehicle, office equipment. These are properties. They can only increase when the business buys a new one, right? If a business buys a new one of these elements, they are likely to see a rise. If the owner also makes a contribution in any form of this element, so if an owner brings in a capital in form of freehold property, then freehold property will increase. Then again, it would increase capital, right? So whilst freehold property will increase, capital will also increase. Then that will suggest that an owner has made a contribution of capital in a form of freehold property. That will be the transaction. If an owner brings in motor vehicle or a car as his capital, then we will see a rise in capital. Then we will also see a rise in motor vehicle. We will see a rise in capital. Then we will see a rise in motor vehicle, right? If we do not see a rise in capital, but we have seen a rise in any of these properties, then it could be that the business has bought those elements, or has bought that item, has purchased that. So it would be likely, or it's likely, that we will see a rise in bank or a cash. Sorry, a decrease in bank or a cash, right? If you have bought something, if you buy the freehold property, if you buy plant and machinery, if you buy motor vehicle or office equipment, they may all see a rise. They will all increase, right? But if you bought and paid for it, then it's likely that your bank account will drop, or your cash account will drop or will decrease, right? If you bought and you didn't pay for it, then it means that your trade creditors would increase, right? So these are things that we need to see. Let's talk about inventory. I have to mute all of you for now. Okay. Let's talk about inventory. Inventory is what the business buys and sells, right? The stock, the goods that the business trades in. So if the business goes to buy inventory, inventory will increase. Inventory will increase. Then there are about 3 different ways that inventory could be purchased. You can buy inventory and pay for it. If you are paying for it, you would either pay in cash or a check. So whilst your inventory is increasing, if you have bought it and paid for it, then you see a decrease in bank or a decrease in cash. That is when you had paid cash, your cash will decrease. If you had paid check, your check or your bank will decrease, right? Then if you also purchase inventory on credit, if you purchase inventory on credit, then your inventory will increase. Meanwhile, your trade creditors will increase because you did not pay for it. You owe, right? Then we can talk about composition of all these 3. A business can buy inventory. Part of it will be on credit. Part of it could be paid for. So it's likely that your inventory can increase, then your cash will decrease, and then your trade creditors will increase. When it happens like that, it means you traded inventory on credit, and then you traded inventory also part for cash with cash. When you get the inventory, you may sell it. So if you sell inventory, there are three ways that you could also sell inventories. You can sell inventory on credit. You sell inventory, and then the people that you sold to may not pay. They will promise you to pay at a later time. If they promise to pay at a later time, they become your receivables or debtors. So if inventory goes down, we're likely to see an increase in account receivable. That's when we have sold on credit. Inventory will decrease and account receivable will increase also. Inventory will decrease and account receivable will increase. We can also sell inventory and then receive money for it. If you have sold inventory and we are receiving money, there are two ways that we could receive it. Either we receive it in check, then check will increase and then inventory will go down. If we did not receive check and we are going to receive cash, cash will increase and then inventory will go down. Right. Apart from this, we have bank and then cash. You can deposit part of your physical cash in your bank account. If you do that, your cash will decrease, your bank account will see a rise. Your bank account will see a rise. So you can also go to the bank and withdraw your electronic money and it will become a physical cash, right? So if you go to the bank and then you withdraw part of the business's money, your bank account will decrease, your physical cash will increase, and that will be a transaction. The business has tendencies to also pick up loans. We're coming down here. The business has tendencies to secure loans. If you secure a loan, the business's cash or bank account will see a rise, and then your loan liabilities will increase. So if we see a rise in our loan liability, it's likely that loan liability came in form of a physical cash, or it could be check, or it could be a direct transfer to our bank account, right? So if you receive loan can come in two ways. Either it would come as a check or it will come as a direct transfer to your bank account, or loan could be given to you as physical cash, which may not really, it's rare to happen, right? If you are picking a loan of a certain amount, usually when it goes beyond 5,000 Ghana cedis, it's very hard that the bank would give it to you, right? Those of you who are bankers, you can confirm, right? The bank would usually want you to open an account and then they deposit that check or that loan into the bank account. Or if you come with any other bank account, they would rather prefer to pay the loan into the bank account rather than to give you the physical cash to just go and squander it. All right. So these are what we're going to see in case 1 up to case A up to case H, right? But how are we going to do it? We would have the column 2 as a benchmark. Column 2 here will be a benchmark for us. We're going to use column A to note out changes that has happened to the items, right? So I'm going to compare item by item, and then we'll see whether that item has increased or decreased. So I'm comparing freehold property, 400,000, is it 4,000 as against 4,000? 6,000 as against 6,000. So for freehold property, I can say that there was no change. Plant and machinery, there was no change. Motor vehicle, there was no change. Office equipment, there was no change. Inventory, there was no change. Account receivable, there was no change. But for bank, there is a change. Bank used to be negative 3,000. 3,000 in negative. But now bank comes to 7,000 positive. All right. Bank used to be 3,000 negative. Now it comes to 7,000. So bank has changed. So we need to note out the amount of change. The amount of change. How do we note out the amount of change? Is the new minus the old. The new minus the old. The new minus the old would show whether bank has increased or decreased. New minus old. If bank has increased, it has increased by how much? If bank has decreased, it has decreased by how much? That's what we are interested in. What is the amount of change? Who can tell us? What is the amount of change here?
10,000.
10,000.
10,000. How did you get your 10,000?
So you subtract, as you said, the new minus old. So the new is 7,000.
Okay.
So 7,000 minus 3,000 give us 10,000.
That's perfect. 7,000 minus 3,000 will give us 10,000. So it would suggest that bank has seen an increase of 10,000. Bank has increased by 10,000. Right. What are the possible ways that bank could increase? We have to think about it. And that will be the transaction. Did we receive money from someone? Did we pick out a loan? Did the owners bring in check as their capital contribution? These are things that should run through our minds, right? But as we had gone through all the items at the top, we did not see any change up there. Let's continue. Cash stays at 500, so no change with cash. We move on to the other side of the equation. Capital is 30,000, 30,000. Now, loan used to be 5,000. Now it comes to 15,000. So what is the amount of change? What is the amount of change on loan? 15,000. Yes.
Also 10,000.
Also 10,000. So if let me pick this and put it up here. Oh, where are you going? Yeah, this is fine. Okay. So I just want you all to follow me. Okay. Now we see a change. We see a change in bank. Bank has increased by 10,000. And then we see another change on loan. Loan is also increased by, I wish I could use an arrow sign, an arrow up to show the increase. But INC will mean increase, so forgive me. This is also 10,000. Let's check through the others. We have trade creditors. Trade creditors is 11,300. So 11,300 here, and then 11,300 there. So there was no change in trade creditors. So we had only two items changing. Loan increased by 10,000. Bank increased by 10,000. If we subject the two together, what will happen for bank to increase by 10,000 and then loan to also increase by 10,000? What happened? Or what could be the possible happenings resulting in loan increasing by 10,000 and then bank also increasing by 10,000? Yes. Who can make a suggestion?
Okay, let me try. So
go ahead.
So what it means is that the business received a loan of 10,000 paid maybe directly to the bank account or a check of 10,000 to the bank account. So therefore, it means that there was a deficit of 3,000 in the bank account. So getting the 10,000 will increase it to 7,000 in the bank account. And then a loan will increase from 5,000 to 15,000.
Okay. So exactly what he said. We had a deficit on our bank account. Remember that when we are keeping a current account, usually the bank allows us to make a withdrawal beyond our balance, right? If we're keeping a current account with a bank, we usually can do what they refer to as overdraft. So here it could indicate that we had done an overdraft. So we were owing the bank 3,000. And then we secured a loan of also 10,000. Then when the loan came in, the loan paid off the 3,000 that we owe the bank. And then now the monies that we have in the bank account is 7,000, right? That's why our bank is having this balance. And because we've secured a loan, we have a loan liability of also 10,000 in addition to our previous owing with the loan. right? But what is the answer? The answer says that we should state as fully as possible the transaction that has taken place. Our transactions should be so simple. We shouldn't complicate the transaction. These are transactions. Look at it. Look at how transactions look like. He paid rent and rate 6,000 cash on September 22nd, right? That's a transaction. Finished. So we are not going to, in trying to write a transaction, we are not going to interpret the effect. We're not going to interpret what has increased and what has decreased. We are just trying to keep the transaction as simple as possible, right? Something similar as we have here. These are transactions. So let's see how I am going to state my transaction. And then going forward, we would all look at how best we can state our transactions. Okay. How do we go by answering this? I will name this as item A. Secured a loan. Secured a loan amount of. Here, there was no currency sign. Let us assume there was a currency sign. So Ghana cedis 10,000 by check. So secured a loan amount of 10,000 by check. That's the transaction that occurred. Raised a loan of 10,000 Ghana cedis paid directly into the business's bank account. A loan amount of 10,000 was secured, deposit directly into the business's bank account. This could be the possible transaction. So what we said was perfect. Joseph, it was Joseph, right? It's perfect, but we are not bringing in the effect. We are not discussing the effect that happened with it. So this should be the answer for A. Raised a loan amount of 10,000 Ghana cedis, obtain a loan amount of 10,000 Ghana cedis by check. A check amount of 10,000 Ghana cedis was received as loan. Right. So this should be the way forward. Let's see if we can discuss the B. What transaction would occur at B? So for B, we are looking at the differences on the column B as against column A. Take note. We are looking at differences that happens on column B as against column A. So we are not moving from B to the very first column. No, that's not the comparison. We are comparing B to A. We are comparing B to A. So quick one. The first thing that I see is that freehold property has changed from 4,000 to 10,000. So the amount of change is 6,000. The amount of change is 6,000. Right. Then we move down. Plant and machinery is 6,000, the same. Motor vehicle is the same, 12,000. I'm comparing B and A. Office equipment is 6,200, the same. Inventory is 12,100, the same. Account receivable is 8,500, the same. Bank has changed from 7,000 to 1,000. What is the amount of change? Yes, who can note it out? What is the amount of change? What is the amount of change?
6,000.
6,000. Is it 6,000 positive or 6,000 negative? Is it 6,000 increment or 6,000 reduction?
Reduction.
6,000
reduction.
So bank has decreased by 6,000, whilst freehold property is increasing by 6,000. All right, let's continue. Cash is the same at 500. Capital is the same as 30,000. Loan is the same at 15,000. Trade creditors is the same at 11,300. All right, so the only elements that we've seen a change on is or are, let's see if I can put down here, freehold property, so FP increase, which is, I will say a plus. I'll use a plus to show increase. Increase by 6,000. And then bank bank decrease. I'll use negative to show a decrease. Bank decreased by 6,000. So now the question is that what will happen? What transaction could take place that will warrant that our freehold property will increase by 6,000 and then our bank will decrease by 6,000? Yes. Yes. Who can help? Yes. Just a suggestion. Andrews. Henry, you are here. Cynthia, Zifa, you are all here. Who can make a suggestion? What happened? What could be the transaction that resulted in freehold property increasing? Did we buy freehold property or an owner brought in freehold property? That could be the possible issues. Have we bought? An owner has contributed?
Okay,
or we
can
have
I
paid for
try?
that on credit? Yes, you can.
Okay.
Okay, so with a freehold property, I think the company purchased something. And then after purchasing, because it was purchased from the bank account, that is why the balance has decreased to 1,000, and then the freehold has rather increased to the 10,000. So it was bought by the company.
Okay. Okay. So simply put, the business bought freehold property and paid check. Right? The business bought freehold property and paid check. That's the only thing that has happened. That's why freehold property is increasing.
Yes.
And then the bank is decreasing. But in our quest to write the transaction, we try to state the amount of change in there. Okay, so let me try and put this in a transactional form. Or who can put this in a transactional form for me? In a very simple transaction. Bought freehold. Bought freehold property worth 6,000 Ghana cedis by check.
You said the amount wasn't stated, the currency, right?
Yes,
So
the currency was not
do we use the CDs?
okay.
Exactly.
So because the currency was not stated, we can avoid the currency unless maybe otherwise stated somewhere.
Right.
Right. But usually in exam, they will state it. So I'm trying to state it so that you would remember to state it in exam. In other questions that we're going to look at, they will show. I'm sure it's an oversight. I failed to show it on the question. Okay. So let's assume that everything is in Ghana cedi. All right. So now this is transaction B. Cynthia, is this Cynthia? No, Priscilla. So this should be the transaction, or something like this should be the transaction. The business purchased freehold property worth 6,000 or costing 6,000 by check. A check of 6,000 was used to acquire freehold property. The business purchased a freehold property that cost them 6,000 cedis. Right? So going forward, I'll ask of your view, right? I'll ask about 3 people to state that their transaction or how they would have stated it, right? So I could call you at any time. We are moving to C. At this point, we are going to compare C to B. We are comparing C to B. Okay. So with C to B, freehold property still stays at 10,000. Plant and machinery has changed from 6,000 to 2,000. What is the amount of change? And is it a decrease or increase? Yes. What is the amount of change?
A decrease of
A decrease of 4,000. Perfect. Motor vehicle stays at 12,000. Office equipment stays at 6,200. Inventory stays at 12,100. Account receivable stays at 8,500. Bank stays at 1,000. Cash has changed from 500 to 5,500. 5,500. So what is the amount of change here?
An increase of
4,000.
5,000.
An
5,000.
increment of 5,000. Okay. So let's quickly note out the changes, and then maybe you can continue with the other items. Let me note out some of the changes before we even continue. Okay, so the first change is motor van. Motor vehicle goes down. So I'm using negative to show a decrease. 4,000 goes down by 4,000. We see cash.
This is plant and machinery, not
Plant and
motor.
equipment. Plant and
Hey,
machinery, sorry.
some baby. Okay, so plant and machinery, forgive me. So T&M decreased by plant and machinery decreased by 4,000, and cash increased by, I'm using plus to show an increase by 5,000. All right. Is that all the changes that we see? No. If we come down to capital changes from 30,000 to 31,000. What's the amount of change on capital?
An increase of 1,000.
An increase of 1,000. Okay. So for transaction C, we've seen three different changes, right? 3 different changes, unlike what we saw with transaction A and B. Transaction C has given us 3 different changes. Plant and machinery goes down by 4,000. Cash comes up at 5,000. And then capital comes up. Sorry, an increase. Cash comes up at 1,000. Okay. So what could be the probable transaction? What will happen that the business's plant and machinery will decrease by 4,000. Meanwhile, their cash will see a rise of 5,000. And then their equity or capital will see a rise of 1,000. Quickly, what should ring a bell is what items would increase capital? Has an owner contributed anything? Has the business generated a profit? If the business has generated a profit, have they sold anything? If they have sold, what did they sell? How much did that thing cost? And then how much did they sell the thing? That's what should ring a bell in your mind. Plant and machinery is going down. Is it that the owner has used or has taken that plant and machinery home for his personal use, or he has sold it? If he took that home, it would decrease the plant and machinery. If he sells the plant and machinery, it would decrease plant and machinery, right? If cash is increasing, it could be that the owner has sold for cash, or probably an owner has brought in cash, or maybe there has been something that has resulted in bringing in cash to the business. So can we translate the 3 occurrence here to mean something? Yes, who can try? Yes, Mark.
Let me try it.
Okay.
Okay, so I'll give it a try here. From what has happened, I see the company sold plant and machinery that is worth 4,000 for 5,000 cedis. Okay, and cash of 5,000 cedis.
Okay.
So when the company gained the cash of 5,000 cedis, it rather increased the capital of the company by 1,000 cedis. So that is a transaction that transpired.
So let's start again with what you said. I want to write exactly what you said. Sold plant and
So I said the company sold plant and machinery worth 4,000 for 5,000 cedis cash, either through auctioning or any means to get the 5,000. So the 5,000 increased, gave them a profit of 1,000. That increased the shareholders' capital by 1,000. Reason why we see capital as 31,000.
Okay, so let me find out from Benjamin why he's also putting up his hand. Ben, I'm trying to write whatever McDonald has said, but I see your hand coming up. Is there any issue? Okay. Mark. Sorry, Ben. Let me hear you.
Okay, so what I also see, can you hear me?
Yes, we can hear you.
Can you hear me?
Yes, we can hear you.
Okay, so what I see is that the company sold plant and machinery for 4,000. Okay, and then they introduced capital of 1,000 Ghana cedis. That's how come cash has increased by 5,000. So for the plant and machinery, they received 4,000 for that, and then they introduced additional 5,000 Ghana cedis. Sorry, 1,000 cedis as capital. Okay, into the business, making cash to increase by 5,500. Already they have 500 in cash. That's how come you have 5,500 there.
Okay. Is there any other view? Yes. Last view, and then we conclude this. Is there any other view, and then we conclude this? Because this is happening at the same time, we can interpret it to mean just one particular transaction, right, Ben? Because this is happening at the same time, we can interpret the whole thing to mean one transaction. So we may prefer to go as what McDonald said than we thinking of maybe an owner also bringing in capital. If we say that we sold our plant and machinery for 4,000 cedis, that's one transaction. And then if the owner is also bringing in capital, it would also be another transaction. So it will be two transactions at C. But we can explain the whole thing happening at C as one transaction to mean that we sold plant and machinery worth 4,000 Ghana cedis for 5,000 Ghana cedis cash, right? If it happens like that, in our mind, it means we have sold for profit of 1,000, right? So what happens here is that we had plant and machinery that probably we don't have a use of it. So we traded it off, but we traded it off for profit. And that is why the business is in business. We are in business to make profit. So they traded the plant and machinery that they acquired it for 4,000 for 5,000. So we generated a profit of 1,000 Ghana cedis. That could be all what happened at C. Right, Ben, rather than we also going to think of the owners later bringing in capital, right? So this is how we can put it. Meanwhile, in last week's arrangement, anytime that we generated a profit, they never told us that we have had a profit. Look at what I've put in bracket here. Look at what I've put in bracket here. I have put this in bracket because you can avoid it. You can ignore it. Right? You can ignore it. If you bought plant and machinery for 4,000 and you have sold it for 5,000, impliedly there was a profit. If you fail to communicate the profit element, it is there already. So you may not even need to communicate the profit bit, right? Let me show you examples of what we did last week, whether the profit was communicated. That's if you really remember those transactions. Let's see something from here. See something from here. On 21st. On 21st September, who read for us last week? That person, I've forgotten the name. Sorry. Yeah, is it Labi? No.
It was me.
Naswa.
My name is Naswa.
Oh, Naswa.
Yes, Naswa Labi. If
Okay.
Labi is easier, you can.
Yes. Naswa. So on 21st September, sale of asset or stock costing 1,000 cedis on credit for 2,500, right? We said that we can see that there was a profit element of 1,500 here. They did not communicate to us that with a profit of 1,500. The item cost 1,000 and then we sold it for 2,500. So impliedly, there was a profit of 1,000. And I'm saying again down there that when you sell for profit, you may not really need to communicate the profit bit in the transaction, right? So we could end our transaction here. Instead of you adding with a profit of something, you could just have ended the transaction down here. All right? Sold plant and machinery worth 4,000 for a cash of 5,000. Plant and machinery was sold for 5,000 Ghana cedis cash, but cost the business 4,000. That's a probable transaction, right? All right. who can state this in a different way to mean the same thing? Okay, so McDonald, you realize that I've taken off the business suit. Everything that we are discussing is about the business and its partners. So if we are selling, it's the business selling. If we are buying, it's the business buying. If we are receiving anything, it's the business receiving. So we've taken away that phrase of the business. We have taken it off, right? So that we can keep our transaction as simple as possible. All right. Okay. Who can say this in a different way? So we discuss item D. Yes. Kofi, sorry, you can do that. Okay, let's move to D. Who is going to pick up on
Isaac, maybe
okay, Joseph.
maybe a comment.
Okay, go ahead.
So we can just remove with the profit of 1,000 cedis from the comment.
Yes.
And that should be it. Or
yes. We could just omit this from the conversation. Right.
exactly.
Yeah.
Yeah.
We could omit
As
this.
you said, we don't need profit. Yeah.
All right.
But I have a question.
Go
I
ahead.
have a question. What if there were two transactions? Can you have a scenario where you have two transactions and be asked to explain? Because we took the assumption that we are just using one transaction. That's why we went with McDonald's view. But what if you had two transactions? Will you be asked to explain? How would the question be like for you to know that is the scenario they are talking about?
It's difficult for us to have a two transaction happening on a particular case, as we have listed here, right? For every transaction would have a dual effect on the accounting equation. Don't forget, this is the accounting equation that we are dealing with here. So for all the cases here, the transactions are one. If the transaction is more than one, then it would give a different case. So one transaction that is written as one transaction that is written together would have a double effect. So we may divide that transaction into two, A and B, right? So it is very difficult for us to pick A here and then just on A, we are interpreting it to mean two transactions. No, that would be very difficult, right? But in the other case, the very first item that we looked at, maybe I'll pick another question with you. Let me see if yes, I have it here. So see what happened on this day, on this very day. On the same day, 2nd February, there were two transactions happening on the same day. That one is possible, right? It's possible. But if we want to discuss the effect will be different. So this would be from this side to... Okay, so Labi, can you read this for us so that we understand it perfectly to explain what Joseph was discussing?
Okay. So I should start from question 1?
Yeah, question 1. Just this side.
Okay.
Just the...
Okay. Mr. Sam Frimpong commenced business as a sole owner of Sam Frimps Real Estate in January 2021 after resigning his post as manager from GCB Bank Limited. He deposited a check of 100,000 cedis, his gratuity, in the business bank account on January 2nd, 2021 as his capital for the business. He withdrew 2,000 cedis immediately from the business bank account for office use.
Okay, so Uncle Joe, these are two transactions happening on the same day. The first thing is that Sam Frimpong introduced a capital of 100,000 Ghana cedis into the business, right? So the effect will be discussed as this. One, because he's introducing the capital through the bank, the business's asset bank will increase by 100,000, and then capital will also increase by 100,000. That's the first effect. Then if we move to the second effect, it will be with this, the withdrawal of 2,000. So if we have labeled this column 1, the second column will be column 2. And then at column 2, we're going to have 2,000 Ghana cedis decrease in our bank, and then 2,000 Ghana cedis increase in our cash, right? So the effect will be discussed in 2 different columns, right? But the transaction is 2 transactions happening on the same day, but its effect may show a different things altogether, or it may be shown on different elements altogether. That is what I'm trying to put across. It is hard for a case on the table here to give 2 different transactions as we saw in this stead, right? It is difficult for us to have a case as shown here to have 2 different transactions. All right, let's continue. We're looking at column D. Column D. Who can discuss the effects and then the transaction that happened at column D? Yes. Who can discuss that with us?
Okay, let me try.
Yeah, Ben, go ahead. Ben, go
Okay,
ahead.
so can you hear me?
Yes.
Column D as against column C, I see for inventory, there's an increase of 8,000 in the column D.
Okay.
In column C, it was 12,100, and then in column D, it's 20,100. Now, when I come down to the capitals and liabilities, I see trade creditors. Column C, 11,300, and then column D, 19,300.
Okay.
Meaning, the effect, as I see over here, is that they receive inventory on credit for 8,000.
Okay. They received inventory on credit for 8,000. Received
Yes, that's
inventory
what I
on
see.
credit for 8,000 Ghana cedis. Okay. But instead of received, can we discuss it in a different way? Instead of we talking about they received it, can we, because we are dealing with creditors, could it be that we bought from them? Yes, Mike.
Exactly. We bought goods or items worth 8,000 from our creditors.
Okay. So let's try to write that for D. Who want to take the E for us? So bought inventory. Inventory is the same as stock or goods. Bought inventory worth 8,000 Ghana cedis on credit. That's all. Okay, who is speaking E for us? Who is speaking E? Yes. Yes, who is speaking E? So now E against D. Who is taking E? Who is discussing?
Can I try?
Yes, Henry.
Okay, so we see a change in inventory from 20,100 to 10,100, meaning we sold goods of about 10,000.
Okay.
And we see a change in accounts receivable from 8,500 to 17,500.
Okay.
Which shows a decrease of 9,000.
Okay.
However, there is an increase in capital of 1,000, meaning there's a profit somewhere. Yeah.
Okay. So let's have a look at the capital again. Henry, let's have a look at the capital.
Sorry. So there was a decrease of 31,000. That means there was a loss. Sorry.
Okay. So can we put it in transaction, a simple transaction? A reduction in inventory by 10,000, an increase in account receivable by 9,000, a decrease in capital by
9,000. By 1,000, yes.
So can we put this whole thing in a transactional form? Okay, McDonald.
Okay, so to to support what my brother just said, when we sold the inventory, items worth 10,000. A company received 9,000. So we sold 10,000 for a cash of 9,000 account receivables. Okay, and that brought the reduction of our capital from 31,000 to 30,000.
Mark, go back and come
Because
back.
that was a loss.
Okay, go
Okay,
back small and
so
come forward again. Mark, take your time. Go back small and then come forward again. So what Henry discussed is that, look at it carefully. He said that we see three different effects. Inventory goes down by 10,000. That's the first effect. So probably you have sold. Account receivable goes up by 9,000. Account receivable relates with people that buy from us on credit, right? So if we have sold, probably we sold on credit for a certain amount. Then we also saw a decrease in capital by 1,000. So we have sold at a loss. That's what Henry mentioned. So we are trying to put this together as a transaction. Remember, Mark, that we didn't receive cash, neither did we receive check. That is why bank and cash are still the same at their figures. We are looking at E. So we cannot assume that we received anything, right? That's why I said go back small and come forward. Come again, McDonald,
okay,
or anyone at all.
I get.
Okay,
I get you. I get you. So we sold inventories worth 10,000 for 9,000 on credit. And
great.
so account receivables increased to 17,500. And since it's a loss from 10,000 to 9,000, we have decreased our capital from 31,000 to 30,000.
That's all. So sold inventory worth 10,000 on credit for 9,000 Ghana cedis. That's all what happened. That's all the transaction that we need to write here. I hope we are picking up small. We've not really done much. We are still lingering around accounting equation. Maybe the coming week we will discuss bank reconciliation statement. Okay. Can we pick up on F? Can we pick up on F? Who is picking up on F? Discuss the effect and then try to put it in a transactional form. Yes. Let's go. Should I mention names? It's left with 3. So Cynthia will pick one, Zifa will pick one, Esther will pick one. So Yache.
Can I try?
Go ahead, Henry.
Okay. So we see a change in figures at account receivables, which most likely, and also
Henry, you're on the right path.
And also an increase has to do with credit, money back to my creditors. Hello?
Yes, at a point I was not hearing you. So if you could come again. You said that, yes, Henry, you said there was a decrease in account receivable, and then
yeah, and also an increase in bank, meaning that our creditors most likely paid us back some money, and we received it as a bank transaction.
Okay. Our debtors probably paid us something.
Paid us 10,000.
It's the debtors who paid us. Our debtors paid us something. The amount of change is 10,000. Yes, Benjamin. Yeah, Ben.
Okay, so that's what we received. Yeah, we received check of 10,000 from our debtors.
Okay. So Henry, Benjamin, we are all on the same path. We received a check of 10,000 from account receivable or debtors. That's all. Received. How do we even write received? Received Oh, okay. A check of 10,000 from debtors, i.e. account receivables. All right, that's all the transaction that took place. A check of 10,000 was received from account receivables. Account receivables paid the business 10,000 Ghana cedis check. That's all. Who takes G? Who takes G?
Can I go?
Go, Joe. You can go.
Also paid a check of 5,000 to trade creditors.
Oh, Joe didn't even tell us the effect. He told us that the transaction straightforward.
Okay, so maybe let me look at the effect.
So discuss it first so that we will all be on the same page.
So when you look at F and J, you see under bank, there's a reduction of 5,000 from 11 to 6,000. Okay. So the effect is under capital liabilities. You see under trade creditors, there's a reduction of from 19,300 to 14,300. So which is also 5,000. So meaning we have paid a check of 5,000 to our trade creditors, making it that amount you see over there.
So that's perfect. Paid a check of 5,000 cedis to trade creditors or account payables. That's all. Oh. All right. Who takes up on H? Yes. Who takes up on H? My ladies,
Just
are you
try
here?
the H.
My ladies, are you here?
Let me try.
Okay. Let's see if I try.
So we received a cash of 3,000, increasing our capital to 33,000.
Oh, okay. If I should state the transaction and let's go. The first one that you said.
So the first one received a cash of 3,000.
Received a cash of
3,000.
Of 3,000. Okay. Okay.
Yes, and capital increase of 3,000. Sorry, I have to attend to a customer.
That's okay. That's okay. Okay. So if we end it here and then we bring in what Zifa was trying to add, we may not get the entire score, right? We are not going to get the entire score, right? Because we said that we are not discussing here in the transaction, we don't discuss the effect, but we try to write a complete transaction, right? We don't tell that this one increased by that, this one increased by that. So where did we receive this 3,000 from? Did we receive this as a profit or we received it from owners? Because it's increasing capital, we can assume. A user named Joyce is requesting remote control of your computer. Hey, Joyce, I don't know what you are asking for, so I'm likely to decline. If you could come again with exactly what you want.
My slide.
Okay.
My slide is not moving. Like I can see half of the page.
Oh, okay. So should I decline on what you are asking me, or I should approve of it?
You decline.
Okay.
Please decline. Thank you.
Okay. McDonald, your hand is up.
So to add up to what Jifa said, I would say the owners injected a cash of 3,000 to the business. So receive a cash of 3,000 from the owners.
Okay,
I
so
hope that one makes sense.
Okay, yeah. So the first one is valid. The second one that you have also said is valid. Either you are saying that the owners injected a capital of or a cash of 3,000 as capital, or you're saying that the business received a cash of 3,000 from owners as capital. They are all valid points, right? So we want to write to suit Zifa. So we're going to write it as Zifa was trying to say. So receive a check of 3,000 from owners. Oh, the write-up is gone. I don't know where it's gone to, but I hope we have followed this so that at least we move on to the next one. Okay.
If you try and do Command Z, undo, it may come back.
I'm trying. That's why you can even see Z here. I'm trying to do that. Command Z.
Okay. Oh. Z, no, Command Z. Z for zebra.
Zebra, okay. So I've done that severally.
It
I'm
is.
doing
So
Command Y so that if I had to redo something, well, but I think we have followed it. This is all the transaction. These are all the transactions that we need to put them up. I'm going to discuss a similar question with you very soon. So at least we can follow that. But what happened at transaction H is that the owner introduced an additional capital of 3,000. The owner injected an additional capital of 3,000 by cash, received cash of 3,000 from owners as an additional capital by owners, right? These are stuff that you can write to mean the H. Is there any question? Is there any question? Is there any question? If not, we pick another question. Quick, we go. Have you all understood this? Hey, ask your questions. Oh. Did I do this question with you? Boys Abre, have I done this with you? I don't think so.
No, the one we did was September or something. Yeah, I don't think this one is.
Okay, then let's look at E, question E, because question E is new in our minds. Let's quickly go through question E, and then we will come back and look at question D, right? This is what we did last week. Let's look at E, and then we will come back to look at D, which is we showing cumulative effect. Okay. We are sharing this. Quick, we go. What is the requirement? Yes, Labi, Nisa. Yeah.
Oh, you want me to do what? Sorry.
So you read and then you answer for A.
Hey, well, you let me read the answering part. We will get to it. So question B, right?
Question E.
I can't see the A part is not
the
E.
E.
Oh, okay. E, okay. From the table below, which gives the effects of individual transactions, you are required to state as fully possible what transaction has taken place in each case.
Okay. So we want to write a transaction similar to what we did earlier. So what do we do? Here, you have to note everything with care. You have to note everything, every detail here with care. If we pick up on building is 900,000. Who can see that it's 900,000 Ghana cedis? And why? Who can see 900,000 Ghana cedis?
When you check the Ghana cedi, there's some 3 zeros there.
There are 3 zeros up here. Yeah. So it means all the transactions here are in thousands. So you have to take note. All the transactions here are in thousands. Okay. So building is the same at A. We move to motor van. Van has changed. The amount of change is 10,000 Ghana cedis. The amount of change is 10,000 Ghana cedis. Office equipment is the same. Inventory is the same. Debtors is the same. Bank has changed from 54,000 to 44,000. So bank has decreased by 10,000 Ghana cedis. Cash is the same at 30,000. Capital is the same at 1,242,000. Loan is the same at 400,000. Creditors is the same as 224,000 Ghana cedis. So the amount of change is just on bank and then motor van. Motor van goes up by 10,000 and then bank goes down by 10,000. What is the transaction? Who can tell us the transaction? Quick, we go.
Let me try this.
Go ahead, Ben.
So paid a check. Yeah, just a clue check. So paid a check of 10,000 Ghana cedis for motor van.
For a purchase of motor van, I would accept that one.
Purchase of motor van. Yeah.
For a purchase of motor van. Paid 10,000 Ghana cedis check for a purchase of motor van. That's the transaction. Bought motor van worth 10,000 Ghana cedis with check. I can accept that one also. All right. So let's see if we can put that down here. A. Oh, where is it? Bought motor van worth 10,000 Ghana cedis by check. Yes, who picks up on B? So we go. Who picks up on B? I need someone to pick up on B.
I can.
Okay, go ahead, Henry.
So we see a change in cash from 30,000 to 22,000.
Okay.
And also a change, which makes it 8,000 cedis difference. And also a change in creditors from 224,000 to 216,000. Meaning we paid off our creditors an amount of 8,000 cedis.
Okay. Is there any contention? There was no contention, so we carried through. Henry, say that again and let me write. So if you didn't capture, Henry, one second. If you didn't capture what we wrote early on for the first item that we looked at, Nathan has sent a picture of whatever that we did on the platform. So you can just quickly go and then take a picture of it or just save it, right? You can save it.
Isaac, I don't think we need it because it's recorded. So
that's perfect.
When they play back, you see it. Yeah.
That's perfect. Yeah. That's perfect. Yeah. Great. All right. So Henry, let's go. He said we paid something.
I think paid creditors an amount of 8,000 cedis.
Paid creditors an amount of 8,000 Ghana cedis. In which form did we pay, Henry? Did we pay check or cash?
Cash.
Okay.
Cash.
So that's all. Who picks up on C? We go. Yes, who is picking up on C? McDonald, your hand came up earlier, but I didn't call you. So if you're going to pick that, C. Hey, Cynthia.
So
why are you not?
Can I try?
Yes, let the ladies also try.
Okay, so with the C,
go ahead.
This is Priscilla.
Okay, Priscilla. Genevieve will take the D.
Okay, so from the transaction, I can see that the business secured a loan amount of 30,000
Okay,
of 300,000, sorry.
300,000.
So that's why there's an increase in the loan and then by check. So let me put it, the business secured the loan amount of 300,000 by check.
Okay, let me write that for you.
That's why the bank has increased and the loan as well.
Secured a loan of 300,000 Ghana cedis by check. Okay, Genevieve, you can take yours. Secured a loan
Okay,
of
so
300 by check.
the next transaction is we made an additional either we made some renovations or something to our building. We added on to our building, 250,000, and we made the payments by check. So bank reduces by 250, and then our buildings increases by 250,000.
Okay, so what took place exactly? What took place exactly?
Additional renovation, either renovation or
okay.
we put up something else, another building or something,
Purchase a
or
building.
purchase another
Okay.
building. Okay.
Okay. Okay.
All right.
So it could be a renovation that we did. It could be a new building that we put up. But in a very simplest context, just assume that probably you bought it. You bought a building. You purchased a building of 250,000. Yeah. So I'm writing it for you as bought building worth 300,000 Ghana cedis by check.
250.
Oh, sorry, 250. Great.
250. Yes.
250. She wouldn't allow me to make any mistake. She will never allow me to make any mistake by check. She's guiding her transaction with care. All right, let's look at E. Let's look at E. Who is picking up on E? At least the ladies have spoken, two of them. So I'm sure they will leave it for you guys. So E. Let's look at E and we go. Do we still have some time? Yes, we do. Let me mention this name. Emmanuel, it's been a while. Emmanuel, there are some people that I want them to talk. Emmanuel, Oliver. Does this? I think his line is dropped though. Okay. Yeah, Genevieve.
Okay, so those transactions, we actually received 140,000 from debtors.
140,000 was received from
our
debtors.
bank.
Okay.
Yeah, so our bank reduced increases by 140. Or 160, sorry.
160.
160.
Yeah,
160. And then yes, our debtors reduces by 160.
Okay. So E, come again with what you said so that I'll write it for you. Received something?
We received a check. We received a check from our debtors, paying off part of their debt. So our debtors reduces by 160, and then our bank balance increases by 160.
160, right? 160,000.
160,000.
160,000, yeah. So that's all what happened. Received a check from debtors 160,000. Yeah. So we've finished with question E. All right. Is there any challenge? These are very simple stuff. These are very simple stuff. Okay. Should I leave some should I make someone a co-host and then the person will take us through Boys Abre Enterprise, how to show this transaction on the accounting equation? Who want to take over? Yes. Who want to take over? Yeah, so you show us how these are going to affect the accounting equation. Henry, should I make you the co-host? And then you elicit contribution from your friends, how these are going to affect the accounting equation. Nathan, Joseph, McDonough, who want to be the co-host? And then just a facilitator. So what do you think this will be? What do you think this will be? I just need someone to do that. Whilst I sit back to look at you. Hmm. 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 So going into to answer question D, we're going to need to do this on maybe in Excel, right? We need to show this in Excel so that at least our work will be easier or will be simple for us. So this is where I am. All right. Are you guys meeting Gabby today?
Yeah.
Books of,
Yes.
Yes.
Books of
in the evening.
Not too long ago, I was telling him that Boys Abre, and then we have Boys Abre here. We have a class tomorrow, face to face, and then we're thinking of moving the class online because we are tired, right? So that's the Boys Abre for you. Where do I get Air to come here? Let's use E to show Air. I hope we all agree to that. I cannot even show that as 3.
Sure.
Okay, so Books of Boys Abre Enterprise. That's Samuel Uku. Those of you who are politics lovers. Okay. We need to enlist our assets first. So we would use one session to cater for our asset. Because we don't know the number of assets that we're going to have, we leave as many rows as possible to capture the assets. So I'll capture my capital liability also down here. Maybe I should come here. Okay. So capital and liabilities. All right. The first thing that I want to capture is my capital. Capital could be interpreted as equity, right? So I could just call it either equity or capital, whichever one works. So I'm calling it capital. Let me show that with small letters. Okay. If I have a profit or a loss, it would go and affect my capital straightforward. Or do you think we should leave a line for an expense and then profit? Okay, let's leave 2 lines here. And then we'll show our liabilities down here. Liabilities. Okay, can we show up here our total assets? In case we have a number of assets, we may need to add them. So total assets. Let me indent it and then bolding it as well. Because I don't know the number of liabilities I'm going to have, I'm also going to leave 3 lines for it. Then we show my total total capital plus liabilities here. So I'll bolding it and indent it as well. All right. On this list, I'm going to show maybe the numbering for the respective transactions. I can also show the dates as well, but I'm choosing to show the numbering. Okay. Allow me to bring this one here. So whilst I show the numbering here, I will show the currency sign here. Okay. All right. So who is reading for us? Labi, you going to do that?
Hey, okay. Show the cumulative effects following the transaction on the balance sheet of Boys Abre Enterprise from the month of October 2013. Number one, on 2nd October 2013, Serhayo started the business with cash of 42,500.
Okay, so if we start a business with a cash of 42,000, first the business will record a cash. The first asset that the business will record is a cash. And then the cash that got to the hand of the business is 42,500. Right. Then again, because Serhayo is the owner of the business, whatever that he brings in will represent his capital, and that is also 42,500. All right. Then we may have to show total for this. Because this is just one transaction, the total asset will be equal to the sum of all the transactions that we have here, but we just have one transaction or one asset. So that is it. We also have to put here the total of our capital liability. So sum of the only capital liability that we have here is the 42,500. So at this point, my accounting equation balances of asset is equal to total liability and capital. Okay. Transaction 2, II. Yes, II, Labi.
He purchases furniture and fixtures by cash, 12,500 cedis on October 5th, 2013.
At the second transaction, what is happening here is that the business is buying furniture and fixtures. So the new assets that the business gets is furniture and fixtures. Furniture and fixtures. It comes in at transaction 2, and then the amount involved is 12,500. But because the business pays off cash, our cash balance will reduce from 42,500. It will reduce by 12,500. So the new position of our cash comes to 30,000, right? This transaction didn't bring in extra capital, so capital will stay the same. Neither did we have anything as liability, so our liabilities will still stay at 0, right? Okay, so let's now try to generate the total. The total will be addition of capital plus furniture and fixtures. That would also give us 42,500. Here would also be 42,500. I've not copied this figure here. I've just done an addition of 30,000 and then 12,500. That's what is giving me this. Right. Okay. Transaction 3. Transaction 3.
He paid rent and rates of 2,500 cash on 6th October 2013.
He's paying, or the business is paying rent for the same month under consideration. The same month under consideration. So if they pay rent, which is an expense for October, it would become a normal expenses. We cannot assume that this is an asset which is a prepaid rent. A prepaid rent will be a rent that we have paid for and a future date, right? A future date. That would have been an asset. But this one, we are paying rent for October, the month and the consideration, the month which the business is starting, right? So it becomes a normal expense that we can put here. Rent expense, rent expense, rent and rate expense, rent and rate expense. All right. Rent and rate expense, because it's an expense, it will be in negative. How much is it? We paid a rent of 2,500. That's a lot. That's a lot. Okay, I'm sure okay, 2,500. But in which form did we pay the rent? We paid the rent in cash. We paid cash for it. We paid cash for it. So our cash will see a further decrease. Our cash used to be 30,000, but because you have paid 2,500, our cash will decrease to that effect. This transaction has not brought in any new furniture and fixtures. So our furniture fixtures will stay the same at 12,500, right? This transaction has not brought in any new capital from owners. So capital from owners will stay the same. Let's try to see if we can generate the total for this side. The total will be additions of 27,500 and 12,500. That will give us 40,000. 40,000. This 40,000 that we have generated here, it should be the same as the total for total capital and liability. So that's the additions here. Our capital plus the rent. Note that no rent here is an expense, so it's negative. Capital plus rent. So 42,500 plus negative 2,500 gives us also 40,000. All right. Transaction 4, Ivy.
He bought 18,000 CD stocks for the real estate on credit on 7th October 2013.
Okay. So if we buy stock for resale, if we buy stock of 18,000 for resale on credit, the business gets to receive the stock in as an asset. And then because they didn't pay for the stock that they purchased, the person that they purchased the stock from will become what we refer to as a creditor. The person that we are getting the stock from on credit will become a creditor. So a new asset comes in as inventory or stock, inventory or stock, inventory or stock. And that comes in at transaction 4. The amount involved is 18,000. 18,000. But we would get to create a liability of, trade creditors, which also amounts to 18,000, sorry, 18,000. All right. This transaction has not brought in contribution from owners, so it stays the same. This transaction didn't warrant any new expenses, so it stays the same. Did I write rent expenser? This should be expenses. Okay. This transaction has not taken any money from the business, so it stays the same. It didn't bring in any new furniture fixtures, so it stays the same. So now we control three different levels of asset: cash, furniture, and inventory. So we add 27,500 to 12,500 to 18,000. So let's see what we stand to get here. 58,000. 58,000. Here we have capital of 42,500, a rent expense of negative 2,500, and then we have a trade creditor of 18,000. So the additions should also give us something similar to 58,000. All right. I hope we are following. So we can pick up on transaction 5. Transaction 5.
On 14th October, can you hear me?
Yes, we can.
Okay. On 14th October 2013, sales of assets stocks costing 5,500 Ghana cedis for immediate check of 6,000 Ghana cedis.
Okay. So if we make a sale of a stock that cost us 5,500 and we receive a check for 6,000, the business is generating a new asset. What is the name of the new asset that the business is going to record? What is the new asset? Who can see that asset? What asset comes?
Bank.
Bank. The new asset is called bank. We're having a new asset called bank, and then the amount involved or the amount that we are receiving is 6,000. All right. We have sold part of our inventory, so our inventory will not continue to be 18,000. What will be the new state of our inventory? It's the 18,000 minus the wealth of inventory that we have sold, which is 5,500, right? So our inventory would decline or decrease to 12,500 because we sold an inventory that cost us 5,500 for a 6,000. We've generated a profit. Is that so? So we can create a line, a row here for profit. How much profit have we received? How much profit are we receiving on this sale? Yes. The revenue generated is 6,000. The cost that you incurred on the inventory that you are selling is 5,500. So what is the profit? What is the level of profit?
500.
500. Perfect. All right. The rest of the items would all stay the same. This transaction didn't bring in any cash. It brought only check, not cash. It didn't take away or bring any furniture fixtures. Our capital stays the same. Didn't affect or didn't bring any contribution from owners. The expense that we incurred earlier was just with rent expense. It stays the same. We've only recorded a profit of 500. The trade creditors, it hasn't increased, neither has it decreased. So it stays the same. All right. Now we can generate our total. We can generate our total asset by adding all the 4 different assets that we have at this point in time. We add 27,500 to 12,500 to 12,500 again to 6,000 Ghana cedis. So what becomes of our new total asset? It becomes 58,500. 58,500. It should match up with the totals that we have on capital plus liability, which is also 58,500. The SIT transaction, Labi.
On 26th October 2013, sales of assets stocks costing 1,500 Ghana cedis on credit for 1,000 cedis.
Okay. If you sell on credit, it creates another asset. Which asset is that? If you sell on credit, it creates another asset. Which asset is that? Which asset is that? If you sell on credit, yes, debtors, or account receivable. Account receivable.
Yeah.
All right. So
Receivable.
we sold this item costing 1,500 to our debtors for 1,000 Ghana cedis. So the new asset that comes in is 1,000. All right. Meanwhile, our inventory will reduce by 1,500, right? Our inventory will reduce by 1,500. That is all what happened. But we need to look at the event that occurred carefully. You bought or you sold stock that cost you 1,500 for 1,000 Ghana cedis. So how much profit have you obtained? How much profit have you obtained? You bought goods that cost you, or you sold goods that cost you 1,500 for 1,000 cedis. So how much profit do you have now?
You made a
loss of
500.
We made a loss of 500. So am I good to put here 0? Because we have a profit of 500 as against a loss of 500. So the state of profit is now a 0 because my previous profit will be deleted by my current loss because they are all 500, 500. Is it okay? Am I good to put here a 0, or maybe am I good to put here nothing on the rule for profit? This rule is the profit rule. If I put here 0, would you agree with me? Because I have a loss. A loss is just a negative on our profit. So profit is 500, my loss is 500. It cancels off. So I've attained a position of a 0 for my profit levels. And then that will be all for the rest of the transaction. Here will be as it is. Here will be as it is. And then bank will be as it is.
I
Yes,
have a question.
go ahead, Mark.
But if you can expand your lines to put their profit, why don't we also have a sell for a loss so that we can put the negative 500, which will balance the whole thing? Or we don't have to add another sell of loss to the total capital and liabilities.
Oh, you can put there another rule to capture losses. But you know, for me, I'll prefer for us not to even put here these two, and then we'll discuss all the two on this capital. So capital will be left alone, and then we are not adding any expense, or we are not recording any line item for profit or expenses and losses, right? So we know that losses will be a deduction to our capital. So we know profit will be additions to our capital. So we know expenses will be a deduction to our capital, right? Left with me alone. I'm saying this because of the way and manner the questions come. Look at it. Here on the capital, you see capital wasn't, we don't add any line item for profit or losses. But when we're going through, I think we saw some profits and losses also, especially the first question that we looked at, right? Here, capital was kept intact. Meanwhile, we saw profit and losses which was affecting our capital, right? So I would prefer that we keep our table like this. Meanwhile, in exam, if you open it up and you keep a line for rent expense, for profit or losses, no one will penalize you, right? So, Mark, this is the perspective that I'm coming from. This is the perspective, and that's where I want you to be, right? That's where I want all of you to be, that our capital is affected by these 3 elements. Meanwhile, I'm not penalizing you. I'm not restricting you from bringing in another line item. Mark, is it fine?
Oh, it's fine with me. But my second question, why is it that all the bank transactions, you always state check, but why can't we do check stroke funds transfer? Or we always have to deal with check alone, whether funds transfer or any mode of payment, we still have to go by check.
You know, from our perspective, you guys are still learning accounting. So we don't want to disturb you with a lot of terms with the bank. You see, this transfer stuff, it's the bank's arrangement, right? So we don't want to disturb you so much. There are a lot of you here who do not understand fund transfer and stuff like that. The only thing that they are aware of is a check. If we're in a business, you receive checks. And then we are saying that anytime you see checks, just explain it as bank. Very soon, we will talk about credit transfer. Very soon, we will talk about direct debit transfers. Very soon, very soon, when I'm discussing bank reconciliation statement with you, right? So I'll add more bones for you to chew. Maybe the hard ones, it will come later. Yeah, Nathan.
Mine is a very quick one.
Okay.
With the sheet, you are using Excel, but let's say in exams or something, is there a special sheet? I'll call it maybe a Excel sheet or a balance sheet or something that will be given to us to be able to use this. Than we drawing with rulers and things, get confused.
Have you seen an answer booklet before? Have you seen an answer booklet before, Nathan?
Yeah, like the one we use is the normal lines, horizontal lines.
Exactly. That's the exact thing that you get.
Yeah.
You won't get any new sheet. You won't get anything new apart from the horizontal lines that comes with your answer booklet. And you would have to construct your table, right? So here I'm just trying to construct table, just that I have used Excel. So if it was your answer booklet, you would put here your assets, your capital liability, and you draw a vertical line in between. I mean, against it, so that the rest of the items can fit in here. Then for after every transaction, you would rule a line to divide it, to show a vertical line to close that transaction, to begin the other one, just as we have done here. So you, at the end of the day, on your answer booklet, you should get some table like this, as I have on this section, right, Nathan? So that's what you should do.
That means it means we will be writing very tiny, because looking at spreading this over 7 or something.
Okay, what I say is that if you open your answer booklet, you have page 1 and page 2 all to yourself. Accounting would allow you to use page 1 and page 2 all to create one table, right? So page 1 and page 2 can be used to create this table, so that you can fit everything on that table from page 1 to page 2. Even in the margins, you can create your columns in the margins. Nathan, is it fine?
Yeah, now it's fine. It's fine.
Great.
Thanks a lot.
Great. I will come with some question B. That question gave you an initial table, an initial balances, where you may have to affect the other transactions on it. So in that regard, you have to draw that table, but you draw it with care. You draw, though they will give you an initial table with some balances, but you draw that table with care. If you draw the table and then fit the exact table on your answer booklet, there come maybe a new transaction and you may not find a place to put it. I'll come with that question very soon, right? Whilst we prepare for exam, I'll come with that. Or I would even share with you in your normal studies, so that you would have a look at it and share your answers with me. But I will do that with you so that you can get the exact concept, the exact knowledge about how to go about all those elements, right? Okay, Joyce.
Yes, please. Why the why the Roman numerals? Is it only Roman numerals we use? Why?
Oh, so in this state, we use A, B, C, D up to H. You remember? Here we have used Roman numeral because the question gave Roman numeral to represent the transactions. This is where I'm picking the Roman numerals from. I.
Okay.
I'm yet to do VII, and then we are done. Right.
Okay. Yes, please.
For further reference, if you don't want to use the Roman numeral, you could use the dates that the transactions were occurring. So at transaction I could just use 2nd October. At transaction I could just use 5th.
Okay.
Right. Okay. All right. Is there any other? Joseph, your hand came up.
Okay. All right. Thank you.
Most welcome. Joe, your hand.
So is it okay? Just a follow-up regarding Nathan's question.
Okay.
Please, can you hear me?
Yes, Joe, you can hear you.
Can you hear me, please?
Yes, we can hear you.
Just a follow-up regarding Nathan's question. So can we use a pencil rather than a pen, so that your book looks neat in the event of you canceling?
Yeah, you can use pencil. You can even choose not to create the lines at all, but try to follow the columns rightly, right? You can use pencil to draw the table. The table is not marked. No one is going to mark you for you drawing a very nice table, right? The only thing that the examiner would want to see is that you have shown the right effects. And that's all. right? So you choose the best way to present your table, even though you are not going to get any score for the table. All right. So if the examiner is marking a table like this, he's marking this, and then he will mark this, right? So this, and he will give you a tick for this and a tick for that. If he comes here, he's going to give you a tick for the change that occurred here, and then a tick for this, right? He's going to mark this and that, and then this, right? But he would also expect you to show the cumulative effect. So the other places where the effect didn't occur, you bring it. Just like I'm going to bring this figure down here. Even though the effect didn't occur on this, I show the figure that is there. Okay. Let me try to generate the total here. Okay. So 58,000 and then 58,000 here as well. All right. In some stead, we can decide to underline this twice. In some instances, we can choose to underline the total twice. It's nothing. It's accounting. It's accountant. I don't know. Yeah, accounting usually try to underline its final figures twice, just to distinguish the figures. You see, I have a lot of figures here. I need to underline this twice. I have even bolded and italicized just to distinguish that these figures are different from the ones that comes or follows down here. Okay, let's look at the last transaction, and then maybe I leave you to prepare for Gabi. Yes. Labi, you are there? Hey, Labi and Gabi, they rhyme.
Yes, they do. On 30th October 2013, he collected debt of 1,000 cedis cash.
Okay, so if we collect our debts and then we collect it in cash, it doesn't come with any new asset. We are losing cash, and then we are gaining cash, and then those who owe us are reducing their indebtedness with us. Those that owe the business are reducing their indebtedness. How much the OS is going to reduce. Meanwhile, we are going to receive in cash. So our cash will see a rise, an increment of 1,000. And then the debtors will see a decrease of 1,000. Our debtors will see a decrease of 1,000, right? So the new position of our debtors would attain a 0. The rest of the items will all stay the same. The rest of the items will all stay the same, right? At this point, you can come with all your questions. You can come with all your questions. We are done with this guy right here. Let's try to generate the total. 58,000 down there. And then 58,000 up here. Oh, I think I'm getting it wrong somewhere here. All right. So this is how the transactions are going to be shown cumulatively, how the effects will be shown cumulatively on this very table. All right. I think for this very tutorial set or worksheet, we've tried to answer every single question on it. This very tutorial set, except some part of the short notes. I will leave question F for you to consider it. Question F. If you find time, you can go through. All right. Is there any question? Is there any question? This is going to be our next tutorial set. This will be our next tutorial set. Please share your email with me today. Share your emails with me today so that I will share the recordings with you directly in your emails. So likely today, I won't share the recording on the page. Or if I share the recording on the page, I'll restrict access. So all what I'm saying is that the recording will be shared with those who have made some commitment. That's all what I'm trying to say, right? Next week, God willing, maybe I'll take you through this briefly. This one too, we are trying to extract transaction from this, and then I'll do this for like 10 minutes, and then I'll begin bank reconciliation with you. Bank reconciliation statement. Bank reconciliation statement operates on a simple concept that if you are keeping a current account with your bank, whatever goes on at the bank, you also have to take records over in your business. So in your own corner, if you receive a check, you record it in your cash book. And then the bank will also record it in your bank account for you or your current account for you. If you receive or if you write a check for payment, you will record it in your cash book, and then the bank will also record it for you in your current account. If the bank should give you interest, you should be aware and then record it in your cash book. The bank would also record it. But I don't know whether that was done. That it's intentional that you should know that the bank has paid you interest. Sometimes when they even pay you interest, the alert will not show. The alert won't show, right? If they decide to charge you, the alert will not show. Until when you had picked your bank statement, those alerts may not show. Those information may not show. So as you try your best to keep your cash book separately in your business, and then the bank also tries to do the recordings for you in your bank account, it would come to a point when you go and pick your bank statement, the information in your bank statement may differ from some information in your cash book, especially the balance of the bank statement may not be equal to the balance on your cash book, right? And that will warrant why we should prepare a bank reconciliation statement. It's just we trying to marry the difference from the bank statement and then the cash book, right? We want to know the processes that we need to go through in doing that, and then the key things that may cause discrepancies between the cash book balance and then the bank statement balance. If informatively, there are two key issues that cause issues with the discrepancy. One is an information that the bank would hold without the knowledge of the business, and the other will be an information that we will also find in the cash book but not in the bank statement. Usually, we term it as timing difference. So two key issues that confront the disagreement will be timing differences and then informational differences. Usually, there can be some errors, clerical errors on the side of those who sit in the what's their name? Teller. Yes, some of the tellers could make mistakes, right? Which we may want to refer to them as errors made by the bank, and then we can also have errors made by the business. As you are recording some item in your cash book, you can make mistakes. As a business, you can make mistakes in your cash book. The same way, when a teller is also making a recording for you at the bank, they can also make mistakes, right? So these are clerical errors that can also affect the agreement of the trial balance, but they are minimal. They are minimal issues. The broader issues are timing difference and informational differences. We would discuss all this thoroughly. As we go through our discussion, we would come across what is referred to as insufficient mandate, dishonored checks, and stuff like that. We will discuss all those ones effectively. Have a very good day. If you have any question, I'll pick it. If not, guys, let's say bye-bye to today. Yes. Yeah, Joyce.
So will we say that the Excel sheet is expressing double entry?
Yes, this Excel sheet here is expressing double entry. For every transaction, there is two effects. You remember that? Double entry said that for every transaction, there was two effects. One account will be debited and one other account will be credited. Or we could have one account debited and two other accounts credited with the same value, right? So for a double entry principle, if you record for a debit 42,500, we can have a credit recording, 2 credit recording that will also add up to 42,500. A similar case is when a business generates a profit, right? Usually when a business generates a profit, we see that profit is increasing capital. And then maybe one other item will also be, especially if it's revenue coming in, the revenue account will also be credited, right? So that is the double entry principle. For every transaction that we record or we have, it would have a dual effect or 2 effect. And then everything that we have done here, all what is up here is one effect. What is down here is also another effect. Some of the items here had the dual effect, especially when we bought furniture. Look at it. When we bought furniture with cash, we reduced cash. If we are reducing cash, it means we are crediting cash account. And we increased furniture account. Furniture account increased because we debited the furniture account, right? So that is the double entry principle.
Yes.
Right, that's the double entry.
Yes.
I wish we had enough time. Then I would discuss journals with you, but it won't come in your exam. And then because you are not training you to be accountant, I don't really know the benefit that you get from me teaching you journals. Unless maybe in your own line of business, you do this daily recording and you would want me to help you to understand those concepts. That's fine. I can help you from that levels. But it won't show in the exam. So teaching it here in the tutorial would be a waste of time. Anyways.
Yes. Thank you.
Most welcome. Yeah. Is there any other issue? All right. So let me know if you have paid me and I've not acknowledged receipt. Just holler me and then I'll go check and then acknowledge duly. Share with me your email addresses so that I will share the recording also with you effectively.